So today I want to go over some common tax lingo that you may hear every year around tax time. Specifically, I want to talk about exemptions, deductions, and tax credits. So first I want to go over and just briefly tell them what each one is, and then secondly, give an example of how they all kind of work together and determine your tax liability. So first I want to go over a deduction. So a deduction represents an expense that you paid during the year that is allowed by the tax law to reduce your taxable income for the year. So there are several different examples of what a deduction may be. There could be the interest that you pay on a mortgage on your home. There could be interest that you pay on a loan for your student loan. There's also allowable business deductions that are available to you if you operate a business. So the amount of impact a deduction has solely depends on the tax bracket that you're in. So say for example, if you find yourself in the 30% tax bracket, every $100 of allowable expenses that you have, you would get a $30 savings in tax. So next up is an exemption, and this works very much like a deduction. However, it is a fixed deduction, and it depends on how many people are essentially on your tax return. So if you have both you and your spouse and two dependents on your return, you would get a personal exemption for each. For 2015, that amount was $4,000 per individual. So if you had 4 people on your return in the example I just gave, your deduction or your exemption amount would be $16,000. And again, it works very much like a deduction, and it all depends on the tax bracket you're in as to the amount of impact it has on your tax liability. So finally, let's talk about tax credits. Tax credits are great because they reduce your tax liability dollar for dollar. So these obviously have the highest amount of impact on your tax liability. So some examples of tax credits would be the education credits in the form of the American Opportunity Tax Credit or the Lifetime Learning Credit. There's also a child and dependent care expense credit and the child tax credit. So now let me show you a quick example of how this all works. So because an exemption works very much like a deduction, I'm just going to use in this example the differences between a deduction and a tax credit. So here's an example. So on Joe's 2015 tax return, his current tax liability is $2,500. So say he has an option to either use $1,000 as a tax deduction or as a tax credit. Which one would he use? Assume that the tax bracket he is in is 30%. So before we move any further, keep in mind that this is just a hypothetical example to show you how deductions and credits work. So in the real world, you won't be able to choose for something to be treated as a deduction or a credit. So using this as a deduction, Joe would save $300 in his taxes to get his tax liability to $2,200. So again, as a reminder, a deduction or an exemption only reduces your taxable income, so it'll only have a marginal effect on your liability. So next, using the $1,000 as a credit, Joe would save $1,000 in his taxes to get his tax liability to $1,500. So as you can see, the tax credit reduces his tax liability by the exact same amount as the credit. So again, in most cases, the tax credit has far more benefit than a deduction. And then obviously Joe, if he had the option, would choose the tax credit in this situation, reduce his tax liability. So I hope this video was helpful in providing some more clarity to these common tax terms. If you have additional questions, click here to book your free, no obligation consultation. Also, be sure to sign up for our monthly newsletter and subscribe to our YouTube channel for weekly updates. If you have a tax question you would like us to answer, please leave it in the comment section below. Thank you.